Hello dear traders, I continue with the second part with the oscillator indicators that we have in MetaTrader. Okay, so in the previous lecture we went to the first 7 indicators and now we are going to the 8th one, which is the momentum, which is pretty famous, I can say, or pretty common indicator in forex trading. Basically, the momentum gives a signal when it changes its direction. So basically, when it changes its direction and starts to rise, it gives us a signal that we need to buy. When it reverses and it goes down, it's a signal that we need to sell, and so on and so on. And normally it is said that the extreme high or low points are a signal that the trend will continue, or we can expect continuation of the current trend. Okay, I will remove it now from the chart and I will go to the next indicator, which is called moving average of oscillator. Alright, it's just right here, moving average of oscillator. I will click on OK, and you see it's very similar to the MACD, but we don't have the signal line over here. It's just displayed in a very similar way. And the moving average oscillator actually is calculated as the MACD line minus the signal line. So we can say it is the difference between the oscillator and oscillator smoothing. Okay, so moving average convergence divergence, or the MACD baseline, which I said is the one connecting the bars, is what is being used here as an oscillator, and the signal line is the smoothing. So the moving average of oscillator is, one more time, the MACD minus the signal line, or one more time we can say it's the difference between the oscillator and oscillator smoothing. And here we have the very same signals when the oscillator changes, so when it crosses the zero line. Very simple. Personally, I would prefer to use more the moving average convergence divergence or the MACD indicator. It is just more visual, it gives better signals according to me. Of course, this is just a personal opinion over here. I want to show you all the indicators available in MetaTrader so you can have better idea about them and you can decide which ones to use. Okay, then we go to the RSI, Relative Strength Index, another very common oscillator indicator in manual trading, especially in manual trading. So the relative strength index goes between 0 and 100. We see the 30 and 70 levels, and we say it's a price following, so it follows the price just because the way it is calculated. Normally it uses the stops that are above the 70 line or the bottoms that are below the 30 line, like this one over here or this one over here, and it is used to show some signals when the price might reverse. It has as well the divergence, which we have already discussed. As well, it forms some patterns that are familiar from the technical analysis, such as trend line or support and resistance trend line. What I mean is you can just draw them over the indicator itself. Okay, so let me look for some example. I'm just looking at the current chart, but normally when it breaks, it will break just before the price. Okay, so you can see here, if I have this trend line on the chart, let me make it precisely, so it will be right here. Okay, kind of trend over here, and then you can see if I do it from this bottom and this bottom, and now the RSI just bounces a bit. Now if I use the very same trend line over the chart, it will be drawn here, right? I will do it precisely again, right over here. So you can see how far is the price from what I'm having it here. So if the RSI breaks the trend line, it will be much earlier than the price would break this trend line on the chart, which will give us the signal earlier than what we will have over the price chart. Okay, so you can look as well for some patterns such as head and shoulders, double tops, triple tops, or bottoms, or whatever price patterns you are familiar with. I will close this now and I will go to the next oscillator indicator, which is called relative vigor index. Okay, this index displays with two lines and it goes around zero level as well. And as a rule in this index, it is used that the closing price is higher than the opening price. Okay, now it uses simple moving average of 10 as a default input over here, and it is considered as best period for this indicator. Of course, you can change it to any if you decide that it will work better for you, and especially in algorithmic trading we don't use these default levels, but we use totally different numbers because we optimize the expert advisors according to the historical data that we have from the broker. Okay, and as you see, there are two lines here with the RVI, or the relative vigor index, which by crossing show us very quick signals. Okay, I will remove now the RVI index and I will go to the next indicator, which I do believe is the stochastic oscillator. Yes, it is stochastic oscillator. I will drop it over the chart. So this oscillator looks similar to the one we had before. We have levels of 20 and 80. Now here as well we have two lines. One is known as %K and the other one is known as %D, which is displayed with a line with dots usually. And actually this %D is moving average of %K. Okay, so this red line is simply moving average of the other line. Okay, again, many strategies over here from this stochastic oscillator. One of the common is to look when %K will cross the %D, and especially when it is in those overbought or oversold situations. So below 20 we are looking for oversold market, and here above 80 we are looking for overbought market. So if we have a cross here, it makes the signal stronger. And here as well we are looking for divergences. Okay, as we said, divergence is when we have lower point on the price and the indicator fails to make such a lower point. So for example, here you can see we have the price going lower, but with the indicator I think it's a little bit higher. So this gives us a signal that there might be a change in the direction of the price. Okay, I will remove now this stochastic oscillator and I will go to the last oscillator that is in the group here, and it is called Williams percent range. I will click on OK using the main %R14, which you can see again is displayed, but this time you can see it is negative. From negative 100 to 0 we have the levels of negative 80 and negative 20. That's why it is said that the %R has upside down scale. Okay, and this is what it makes it different from the stochastic oscillator. So it is very similar to the stochastic oscillator, just it has a negative scale. And one of the suggestions here is to wait to see confirmation on the price itself. So if we see signal on the indicator, we might want to wait a bit to see the price actually going with the direction of this signal and then to enter on the market. Okay, so these were all oscillator indicators in MetaTrader. I just wanted to go over each one to give you an idea how they look, what are the basic signals that they provide, and as said, each one of them has many interpretations and could be used in many different ways. Thank you very much for watching this lecture. I wish you to enjoy the day, and I will see you in the next lecture. Cheers.